LiteFinance, the world of financial freedom.
Hello, it's Monday, 15th of May, and it is time to start the market forecast. This week, as previous one, is promising to be very interesting. We have a couple of very important data publications, so there should be plenty of occasions for trading. Let's begin as usual with the calendar. So today, on Monday, nothing major happens, so we move to Tuesday, where we will receive labor data from the UK, preliminary GDP reading from the Eurozone, US retail sales, and Canadian inflation data. On Wednesday, early, we will get preliminary GDP figures from Japan, final Eurozone CPI, and crude oil inventories. On Thursday, Philadelphia Fed Manufacturing Index, and on Friday, Tokyo CPI, and a conversation of Jerome Powell and former Fed Chairman Ben Bernanke at a conference in Washington, D.C. So it is not that important, but as always, the market will hear and look for some hints, since Fed Powell is one of the most important figures in the markets, so any strong statements can cause a bigger price move. Okay. The threat of a US default, the bank crisis, the expectations of the Fed's dovish turn in 2023, and the approaching recession of the US economy. These are four reasons for gold's upsurge to historical highs and capital inflows into gold ETFs in March to May, after 11-month outflows. So the XAU-USD's bullish factor continues working. So the turn to an uptrend looks even more so surprising. According to RBC Capital Markets, the debt ceiling negotiations between the Republicans and the Democrats prepared the ground for the rally of precious metals. In the previous episodes, we could say, they would reach an agreement at the last moment or a few hours after the X time, like in 2011. The time Goldman Sachs basic scenario suggests the decision will be made the day of the so-called X date, plus or minus 1 day. The situation is highly explosive and raises demand for safe haven assets. Still, the XAU-USDs didn't soar on the information that President Biden and the Speaker of the United States House of Representatives, Kevin McCarthy, had postponed their debt ceiling meeting. Bloomberg's insider said there are already some agreements based on staff-level talks. What's more, Reuters predict growing bond yields amid the political drama, which is a headwind for gold. The PPI slowdown to 2.3% and increase in US jobless claims to the highest levels since 2021 seem to indicate the US economy is cooling. On paper, that increase the chance of recession and monetary policy easing by the end of the year. But in fact, a recession is a world away when the labor market is so strong. Investors are now serious about the FOMC's statements that the Fed funds rate will be kept high for a long time. That strengthens the greenback even if the chance of monetary expansion in September grew to 85%. Gold is opposed to the dollar, so it usually falls when the USD index rises. Banks' bankruptcies are in the past, but their echo can still be heard. Thus, PacWest shares tumbled after the bank's deposits fell 9.5% in the week ended 5th May. The cracks in the system are the Fed's main pain and can support the XAU-USDs. Nevertheless, the central bank has some other tools to fight the crisis as we know it now. So gold still has its trumps, but they are not that strong at a closer look. XAU-USD risks pulling back amid a debt limit agreement, the US economy's soft landing, the Fed's refusal to drop rates, and the bank system's stabilization. The bulls' failure to hold quotes above $2,000 an ounce will be the reason for short-term sales with a target of 1,977 to 1,983 and to 1,953 and 958. And okay, that will be all from my side. Thank you for watching and till next time.